Hi, we're discussing Your Money Matters on NDTV Profit because we understand that your money matters. This show gets you actionable insight on everything personal finance. And to that end, we're speaking about mutual fund strategy today. Ahead of the budget 2025, there are several expectations that are building, and in the listed space, in the equity space, there are a couple of pockets that are getting more attention than others. Among them, you have the housing space, and you also have the public sector companies. What's expected and how are fund managers positioning themselves? Incidentally, my guest today is a management of two distinct funds that deal with these very themes. He also manages a multi-cap fund. Joining me now is Anand Sharma, fund manager at ICICI Prudential Mutual Fund. Anand, thanks so much for taking the time. I'd like to split this conversation into three separate buckets. We'll talk about the Housing Opportunities Fund that you manage, we'll talk about the PSU Fund, and then we'll end with a conversation about the multi-cap fund that you are currently the fund manager of. Let's start with the housing theme. When I looked at your portfolio, you have two real estate companies and you have quite a few allied companies. Can you explain why you're playing the housing theme in this manner?
Sure. First of all, thank you so much for inviting me on this show. And let me start off by wishing everyone a very happy and fantastic 2025. I hope it's a great year for everyone, both personally and professionally as well. Now, if I look at housing, right, typically when you hear this word housing, uh, the common perception that everyone has around housing is that it's just about real estate. But actually, if you look at it, when we use the term housing, it actually speaks about the entire ecosystem of real estate. Now, what do I mean by that? Let me just explain a bit about that. Typically, if you look at real estate as a sector, when real estate does well, there are a plethora of sectors around it which also tend to benefit. And let me just take names of a few sectors, right? I mean, you start off from cement, you start off from a few construction companies which are involved in the construction of houses, whether it be residential or whether it be, official real estate, for example, right? There are a set of companies which participate in the ecosystem as soon as the houses are made, right? For example, sectors like paints, sectors like building materials, sanitary ware, etc. You need an entire ecosystem of power that is needed to ensure that the houses are operational, right? And after the houses are ready, you need a set of white good companies, which are essentially your consumer durable companies, your kitchen appliances. So all these sorts of companies tend to benefit when real estate or housing as an entire segment does well. And that's why the focus of housing is never been on just real estate. It's always been on the ecosystem of real estate per se. Now, if you actually look at it, there was a very famous research paper which came about 15, 16 years back. And the name of that research paper was Housing is the Business Cycle. And if you actually look at some of the major financial crises also that have happened in the past, and specifically in countries like US and Japan, a lot of it have been caused by what's happening in the housing sector. So in my view, it's necessary to also spend a lot of time on what's happening in the housing sector. India obviously is going through splurge of urbanization, where I think up from about 35% urbanization that we are, we'll probably reach about 45 to 50% in a few years time. So in our view, there is an entire ecosystem which is going to benefit as we Indians go through this journey. And hence, for example, to your question, right, as to why, for example, housing is not just about real estate, it's actually about the ecosystem of real estate.
Point taken. Okay, so from that perspective then, I see that you have what, close to a quarter of the fund in banks, and you have cement companies, which is the second largest holding. You also have consumer durables, which is about 12.5%. So that point is well made.
Yeah.
Heading into the budget, though, are there any factors that could emerge that you're anticipating that could reinforce certain steps that you've taken in anticipation of that?
So, so I think generally, if you look at it, again, I'd like to throw one data point. If you go back to the pre-COVID era, for example, share of affordable housing in India used to be between 35 to 40%. Today, that number has come down to below 20%. So I think, in my view, over the next maybe 5 to 10 years or so, there needs to be a lot of effort from the government side as well, to ensure that a lot of homes are constructed both on the urban side and on the rural side. From time to time, we do hear of a lot of schemes which are already ongoing, right? It's been almost 9 years since the Pradhan Mantri schemes, etc., have been going on. So I think, as far as budget is concerned, while it's difficult to call out what will happen, I think there is always expectation in general that over the next 5, 7 years, we need a construction of a lot more urban as well as rural homes in the country. So to that extent, any help would be definitely appreciated.
Uh, now, do you anticipate, you've seen the earnings come through, and this is kind of tied also to the PSU fund that you operate. Uh, do you think that earnings will improve? Of course, there's been a bit of a patchy report card so far in the third quarter, but based on announcements that are made, there's widely expected to be a measure or a few measures to bolster consumption. Does that affect the funds that you operate?
So I think generally what tends to happen is that, as I said, any help from the consumption side is always great for the country, right? Because if you look at what's been happening in the last 9 months or so, consumption patterns have not necessarily been great. So to that extent, if there is any help that happens, especially for the middle class and the lower middle class, consumption anyways, it's always a multiplier effect, right? So to that extent, I think any portfolio and a lot of sectors in many of the portfolios would
Anand, let me
definitely.
clarify that. Anand, let me clarify that. What I'm
Yeah.
trying to get at is ultimately you're going to see valuations that will track earnings. And so what I'm trying to get from you is your own expectation heading into the new financial year of earnings growth in the two spaces that these funds are, right? You're talking about PSU earnings broadly, and you're talking about in the housing, so financials primarily, but you're also talking about construction companies and cement companies. Based on your anticipation and your current projection, where does earnings growth come in? And so therefore, what is the potential in the new financial year? Is it better for investors to be a little bit more conservative in their expectations for growth in the next year?
I think that's a very fair statement to make, that over the next 1.5 years, it's fair to have a little reasonable, rational expectations compared to the experience that people would have had in the last 4 years. And that's why today, to be very honest, there is a lot more comfort in large caps that we have compared to mid and small caps. Primarily because in large caps, for example, typically investing is all about expectation versus reality, right? And I think in large caps, expectation reality mismatch is unlikely to occur in a big way. So to that extent, some of the large sectors, if you look at, for example, financials, etc., I mean, generally I would say the expectations are far more reasonable compared to many of the other sectors which would have a higher allocation to mid and small caps.
Yeah, and it seems that even in the banks that you've chosen to invest in, you have chosen and tilted towards the larger names. Even in the
Yeah.
cement space, you've tilted towards the larger names. So would it be fair to say that you go with the market leaders, with the larger names in the space broadly at this juncture?
Yes, I think the way we would like to look at investing over the next 2 years is look at companies who can, at least not lose market share. So either they should be market share gainers, or at least they should grow in line with the industry. I think any companies which are likely to lose market share, I think it might have a tough time.
So I also want to talk about the multi-cap fund, because
Sure.
ultimately, Anand, I'm sure you'll agree with me, a lot of people came into this category of funds when there was a diversion between the performance of flexi-cap and multi-cap, and that took place because of the run-up in the broader markets that happened till just a couple of months back, a few months back. The sharp crack in the broader markets is only very recent. And so to that
Yeah.
extent, what I'm curious about and what I want to understand from you is, because of that required allocation of 25% at least to small and mid cap, how are you protecting the capital? How are you positioning yourself to ensure that you fall less than the market?
Sure. I think multi-cap funds have a distinct advantage as well. in the sense that emotion gets taken out of a fund manager, right? Whether I like it or not, uh, I have to ensure that when I'm running a multi-cap fund, just as you suggested, I have to invest 25% each in mid and small. The two things that we can do to ensure that investor wealth is not eroded is to start off at this point of time. I think the allocation to mid and small cap can be restricted to the bare minimum. That's number one. The second one, I think, where we can make a difference is to ensure that we are in the right stocks and the right sectors. So that's where choosing the best bottom up stocks in this country, where valuations are reasonable, where growth prospects are also reasonable, and where we think that earnings downgrades are unlikely to occur. I think those are the spaces which are likely to protect investor wealth in an environment of volatility.
So as I look at the fact sheet of the multi-cap fund, I see that it's oriented more towards the growth side of things, as you've just pointed out. Help me understand the strategy that you employ and the metrics that you track when you are choosing your portfolio of stocks.
Okay. So I think I would talk a bit more about the mid cap and the small cap side, because I think that is essentially also a point of interest. So essentially, the way we would like to look at investing in a multi cap fund is basically we use a mixture of growth at a reasonable price. And for me as a fund manager, I think that's pretty important. Growth at a reasonable price, because you will always have great stocks which might be available at very, very expensive valuations. And if they disappoint, they can really erode wealth. So I think for me, growth at a reasonable price is very, very important. I would want to ensure that the stocks where I am in the next 3 years, for me, the EPS and the profitability cycle is very important. If, for example, you end up investing in a great set of companies where the profit growth is going to be pretty bad over the next 2 to 3 years, investors are not likely to have a great experience. So for me, that's very, very important to ensure that I invest in stocks and sectors where valuations are pretty reasonable, and obviously there should be some amount of growth over the next 2 to 3 years. And when I refer to growth, I refer to profitability growth. The other thing that we tend to do from time to time in this multi-cap fund is we tend to do a bit of thematic investing. The beauty of our markets is there are times when you can actually make a lot of alpha in a shorter amount of time by actually being in the right theme at the right point of time. So if you can catch those themes, you can actually make reasonably good alpha in probably a shorter amount of time as well. So that's typically the strategy that we tend to use. But at this point, I think one of the paramount things for us is to also ensure that returns, while we have to give good returns over the next 2 3 years, in times of volatility, we also have to ensure that investor returns are not eroded. Because once you erode returns, right, to get back that capital and then to make money over it, it's not an easy job.
Okay. The last point on the multi-cap fund is that I see that your turnover ratio, which is essentially a measure of how often you churn the portfolio for those people that are wondering, is not very high. So are you a fund manager that likes to keep stocks for a longer period of time? And the reason I'm asking this question is one would assume that at the broader end of the spectrum, you need to be a little bit more nimble. Wouldn't you agree?
Yes. So the way we approach this portfolio is typically we tend to take a core and satellite approach. Now, just for the benefit of people who are watching the show, what a core and satellite approach typically means is that you have one part of the portfolio where you would like to take very long-term calls. And when I say long-term, it's typically 2 3 years and beyond. And there is a part of the portfolio where, when I refer to doing some kind of thematic investing, we are okay to take some short-term calls. And if the call plays out, we are okay to get out of those particular stocks and sectors. So that's typically that we tend to what we tend to do. So it helps to have a core and satellite approach. Personally, I have followed it for a very long time, and it's helped us as well.
Okay, fantastic. Anand, thanks so much for joining in, for speaking to me today, and pleasure speaking with you.
Thank you so much. Thank you so much.
All right, so that should give you some perspective as to how a fund manager that is operating in the very themes and very spaces that are in focus ahead of the budget is positioning, and what his own expectations are about those spaces. But the second part of today's conversation is what I generally like to call Wellness Wednesday. And this is where we talk about your physical health and your mental health. And the reason we do this is that we talk about how you can build your wealth over the course of the week, of course, but then we also want you to be healthy and happy so that you can enjoy the fruits of your labor. In the recent past, there has been an influx or several cases reported of a disease called Guillain-Barré syndrome. It's GBS. There were several cases that emerged in Pune. And I'm sure that you've probably read about some of this over the course of the last couple of weeks. What I'd like to do today is talk about what this is, how it comes to pass, and what are the early signs, if at all, that you need to watch for and how to protect yourself. Joining me is Dr. Prateet Sandhani, who is internal physician and intensivist. Doctor, thanks so much for joining me once again on this program. Help me understand GBS. I hope I said it right. How does it come to pass? What does it entail?
Afternoon. Thank you for having me on your show. Well, GBS is called Guillain-Barré syndrome. And colloquially, let me tell you a little bit, a line about the history. It was first discovered in 1916. So it's an old disease. Now, GBS is typically what we call in neurology as a polyneuropathy. There are nerves in the body, there are central nerves and there are peripheral nerves. This disease affects the peripheral nerves. The patient typically will come to you with tingling and numbness of the feet, of the hands, weakness in the legs first, which gradually and slowly move upwards towards the center of the body. This is called GBS. There are several forms of GBS. The typical GBS that we are talking about right now is something called as an acute idiopathic demyelinating polyneuropathy. And there are other forms where only muscles are involved. There's only motor involvement. There's motor and sensory. That means, your sensations are also lost. There is a variant where you don't get an ascending paralysis, but you get facial involvement and a descending paralysis. So this is what GBS is.
The cases that have emerged, and there are a lot of these symptoms that you're mentioning, a lot of them centered around one particular region. We're talking about several cases that emerged in Pune. And we've heard of a couple of cases, of course. I know of a case here in Mumbai as well. But why is this caused? As I understand it, it's an autoimmune disorder, doctor.
That's true. This is an idiopathic demyelination. This is an immune-mediated disorder. Having said that, there are triggers for this infection. And the commonest trigger that we found is a bacterial infection called Campylobacter jejuni infection. Campylobacter jejuni is a gastrointestinal bug. It can affect other systems also, but typically gastrointestinal bugs. And historically, about 25% of the patients who've had GBS, we've detected Campylobacter jejuni. Also, let me tell you, that doesn't mean that everyone who gets a gastrointestinal infection gets Campylobacter. And more so, it doesn't mean that everyone with Campylobacter gets GBS. As I say, it's immune mediated. So it's your body's immune system that gets affected following this infection. 70% of patients who've got Campylobacter jejuni have actually had GI infections. So, it's also true, vice versa. Not all Campylobacter get GBS and not all gastrointestinal infections are Campylobacter. Now, there are several strains. There are other viruses also that can cause GBS, typically something called a cytomegalovirus, HIV, COVID in the past, we've seen GBS secondary to COVID, Epstein-Barr virus, Zika virus, hepatitis E, some bacteria like E. coli, Mycoplasma, and H. influenza. Now, if you ask me about probably what's happened in the recent cluster of patients near Pune, I think this is a food, water and foodborne bacterial, post-bacterial immune system. So I would feel there are many, many people who would have got Campylobacter jejuni, but those few people where the immune system was, just mitigated or not adequately responding to the infection got GBS. And this is seen with Campylobacter jejuni and E. coli bacteria. So I think this is a food and waterborne illness.
Okay. Now, the symptoms are pretty alarming, to say the very least, doctor, because you're talking about complete paralysis of hands and legs that I've heard of. And in several cases, you're talking about people that have to be put on the ventilator. What is the treatment like? And is there such a thing as identifying it early and treating it early so that you can reduce some of those symptoms and maybe even head it off?
So your questions are two-folded. Let me go to the second part first. And the question is, can you recognize this earlier? Yes. If you've had a preceding illness, like a gastrointestinal infection, that means diarrhea, vomiting, in the past 2 to 6 weeks, up to 12 weeks, and then you have tingling in the legs, you have weakness that starts from your legs, goes up, you have facial weakness, that means both your sides of the face are not moving adequately, this is an alarming situation of a possible Guillain-Barré syndrome. As this paralysis goes upwards from downwards, it can affect your respiratory muscles. And that's one ominous side effect or disease sequelae where you can go on the ventilator. Well, the treatment is, there is treatment, early recognition. We have drugs called as intravenous immunoglobulins. These are drugs that combat the immune system, your body's immune system, to fight the sequelae of the infection. And we have something called as plasma exchange, which is like a dialysis, where you remove your blood, you filter these antibodies that are produced and re-infuse them. So there are two modalities, but the most important thing is physiotherapy post this treatment. This treatment actually just stops the immune response to flare up, to go further up. But what's occurred, what's damaged already, only is recovered with physiotherapy, and physiotherapy.
Okay, so talk to us about that recovery, because somebody who's gotten this, first of all, it's not a cheap process, right? Because you're talking about prolonged periods of time in the ICCU at the very least, as I understand it. Doctor, correct me if I'm wrong. And so therefore, ultimately, you do need some kind of cover if possible. You're not an expert on that, but health insurance, as you said, physiotherapy, that's what we speak about on a personal finance show. But talk to me about the recovery. What is the kind of time that you need to spend, and how much time do you generally see recovery in? Can you make a whole recovery?
Great question again. So yes, insurance is mandatory. Thankfully, this government is doing a lot, insuring people for up to 5 lakhs per family, et cetera, from the government side, which could be adequate for a mild to moderate disease. Now, the recovery typically is anywhere from 2 weeks. And we've had patients up to 3 months and 6 months lingering with this disease. This disease doesn't have a high mortality. It's not got a high mortality, but the morbidity that can come with this disease can be extensive and prolonged. So you can have weakness, which requires physiotherapy. So the cost is also high. Intravenous immunoglobulins are expensive, and the dose really depends on the weight of the patient. The dose is about 400 milligram per kilogram per day, and you require it for 5 days. It can cost anywhere from 80,000 to 120,000 per day for the next 5 days. And so is plasma exchange. So the therapy is prolonged. The therapy is 5 to 7 days, but the physiotherapy and ICU stay can be prolonged. If you have someone on the ventilator, we've had patients on the ventilator for months together. And that, of course, will mount your cost, agony, and also cause you mental health discomfort.
Okay. The recovery post, and this is the last question, doctors, we have about a minute. Can you explain that? Because once you leave the hospital also, you're going to have significant recovery, right?
So the recovery consists of exercises, rehabilitation, nutrition, and prevention of infections like bed sores and pneumonias, urinary tract infection, because you're almost bed-bound initially until you start recovering. The recovery, as I said, can be 2 weeks, for a very mild case, up to 3 months and 6 months. The good part is about 95% of the patients will have 100% recovery. That 5 to 7% of the patients may have some residual effect or damage, if I may say so, and the mortality is probably less than 5 to 7.5%. So it's just extensive rehabilitation, which can be done at home once the patient is relatively better.
Thank you so much for that last word of comfort, doctor, for everybody tuning in. this is certainly something to take heart from. Doctor, thanks as always for joining me on this program, and pleasure having you.
It's always a pleasure to be on your show. Thanks much.
All right, that brings us to the end of this particular edition of Your Money Matters. If you've got questions for us, don't hesitate to write in on any one of our social media platforms. Thanks so much for tuning in. This is NDTV Profit.